And we are live. Welcome to this edition of Wealthy Wednesday. Oh my goodness, I'm so fired up because I have this new improved toy here. Yes, it's a microphone. I do feel bigger, faster, stronger. So this is going to be incredible. It doesn't take much to get me excited.
I was going to
So
say that.
I'm so easily pleased. I truly am. So, my name is Leah Garcia, and I am a financial strategist and insurance professional. And it is my crusade to help you properly protect, distribute, and transfer your wealth so you can build that legacy and create generational and multi generational wealth for your family. But today is not about me, it's about my incredible guest that I have known for several years. And she has such a niche, such a specialty that I think now more than ever, it is so relevant that I bring awareness to you because I think so many of our seniors are struggling, trying to figure out how to make ends meet, trying to figure out how to shore up some of their financials with inflation and maybe even long term care. A lot of things that are those booby traps in their financials that they haven't addressed, and now they're finding themselves in a quandary. So, without further ado, I would love to introduce my incredible guest, Miss Lisa Rayburn. Go ahead and take it away, Miss Lisa.
Hi, Leah. Thanks a lot for your time today. And thank you, everybody, for listening to this. I am absolutely passionate about what we do. My name is Lisa Rayburg. I'm president of Rayburg Life Insurance Settlements. So, what is a life insurance settlement, right? Leah will be talking about that a lot today.
Awesome. Very, very cool. Well, first, tell us a little bit about you. I mean, how did you get into this industry? I'm sure it's very nichey. It's not something that people even are aware is even available. So, how did you find your way into viatical settlements?
I have been in the insurance industry for over 30 years. I think I'm running up against 35 years, and I'm still
Wow.
28 in my head, so that blows my mind. But
Yeah.
I've been working with advisors like yourself for literally all that time, but I've been in corporate. So I've been at insurance companies, I've been at GAs or wholesalers, my entire career. And about 8 years ago, it was time for me to not be in an airport every week. I was, running sales teams and building teams around the country. And it was just time for me to not do that anymore. My husband's older and I needed to, be closer to home, shall we say. So point is, I thought about what is something different that I can bring to the advisor and agent relationships that I've just, had for a long time, and found life settlements. And here's the couple keys for me. Number one, as you know, our population is aging. So this is something that's become even more important going into the future. Like I'm aging, right? Once again, still can't believe I've been in the insurance industry 35 years. So it's more, and how can I help those people and help advisors at the same time? And here's a statistic that blew my mind, and this is where it started. 2.5 million seniors a year will lapse or surrender their life insurance policies. Now, lapse means I stop making the premium payments on my policy and I basically throw it out. I let it go. It goes away, right? Surrender means I go to the insurance company and say, hey, give me the cash out of my policy. 2.5 million. And so that's a lot of people. And most of them do not even know that this niche existed. So I thought, I'm all in, right? It's a highly compliant marketplace, which is important. It's a highly regulated marketplace, which is important to me. And of course, it's very legal. So all those things, all those components made me dive into the deep end of the pool and focus solely on life settlements. And it's so heartwarming for me personally to contact an advisor or a client, depending upon who I'm speaking with, and let them know that the wire transfer just went through or the check is in FedEx. So I'm just passionate about it. So I'm so thrilled to be here to be able to raise visibility.
Yeah, for sure. And and when I think of working with seniors, it really takes a special touch. There's so many kind of discussions that can bring up a lot of emotions, right? We're talking about people who are looking towards their sunset. They didn't anticipate that they would not be able to continue this life insurance policy. They didn't anticipate the fluctuations, or maybe now they're looking at having to downsize and changing their lifestyle. They didn't anticipate that, and they're looking for whatever additional resources that may have, which they might be exploring reverse mortgages and taking out additional loans. And so this is one resource as an alternative, or maybe in addition to that. So you covered what it is. It's basically selling a life insurance policy that you no longer want, need, or can afford. Am I on track? Am I on?
You're exactly on track. And if I could add a comment to what you just said, I hear this a lot where clients say, I never thought I'd live this long. Right? So that's another reason. But yes, it's exactly about don't want, don't need, can't afford. I'm going to get rid of my life insurance policy. I look at us as the last stop on the bus line, right? We are the last option. And clients are like, I'm going to get rid of this policy. We're just here to get clients more money than lapsing or surrendering. And on average, we generate 6 times cash surrender value. So I'm absolutely delighted to talk about real client examples anytime.
Yeah, that's good. I love that you said that, because if you have, so let's cover the basics about life insurance. There's 2 basic buckets, and there's a lot of nuances in between. But basically, you have a term life insurance policy that has no cash value. It has a birth date and an expiration date. Now, there will be some nuances, some conversion options potentially. However, those are term policies and there's no cash value. The other bucket is that cash value element. And essentially, it can last, these policies are intended to last for your entire life, regardless of how long you live. So when we refer to cash value, we're talking about those permanent policies. So if you surrender a permanent policy, which means you're no longer going to pay it, you're going to cancel it, you're just going to say, we're done with it, there may be some surrender value, and your insurance company can calculate that for you. It will say, it's 10, 20, 30, 100,000, whatever that number is. So if you're saying that they have 100,000, they can potentially get up to 6 times their surrender value. Is that what I'm hearing?
That's what you're hearing. Now, clearly, those are averages, right? And it just depends upon the face value of the policy and, how it's funded and all those things. But yes, specific statistics from last year from the Life Insurance Settlements Association, they looked at all their members, which basically represent about 95% of the life settlements market, and asked them how many policies did you sell? What was the face value, was the cash value, like all that stuff. 6 times cash surrender value last year. Yeah, it's a really big deal. Now, interestingly enough, remember I mentioned the 2.5 million who no longer want their policies? Brace yourself for this one. Only about 3,218 to be exact, clients sold their policies last year. So it's a really big gap because a lot of people just don't know that this is even an option for them. Now, what I'm not saying is all 2.5 million could have sold their policies, right? But what I am saying is an awful lot more than 3,218 could have. They just did not know that life settlements exist. So that's why it's such a pleasure to be here today. And I really appreciate the opportunity.
Yeah, that's such a great point, because who is going to tell them? Will the insurance company tell them, oh, by the way, you don't have to surrender your policy. Let me introduce you to this amazing, beautiful woman, Lisa Raber, and she will help you how to look at a viatical settlement? No. Will a traditional wealth management or financial advisor, unless they have a resource, they won't even have the conversation themselves. They may not even know that it exists. Mm-hmm. Now, I'm a licensed life and health insurance agent, and it is part of our test. Viatical settlements is on the test, but I have to tell you, for the first 5 years of my career, I had no idea what that meant. I mean, I knew what it meant per se. Yes, selling your life insurance, and I could answer the question and check the box. But how can this really be incorporated into a financial plan? So unless you have somebody who is knowledgeable, they are truly out for your best interest, they probably won't even discuss this with you. They're going to say, go ahead and sell your insurance, cancel your policy, and let's go ahead and do something else with those resources. They won't even have the discussion. So that you are bringing this awareness is so critical. Go ahead.
I appreciate that. And so I'd like to make two distinctions, like you were talking about term policies and permanent policies. We have two distinctions in our market as well. We have viatical settlements, and that can be some misperceptions for clients. And we have life insurance settlements, or life settlements for short. And they're the same thing in that the process is the same and everything else. But technically, viatical settlements are for clients with 2 years or less to live. So back to your point, viatical settlements are on the insurance test, right? But that's an older term. And it's really got this connotation of only people that have really, really, really significant health issues can sell their policies, right? That is a misperception that's out there, Leah. And I know you don't have that misperception, but a lot of people do, right? And frankly, if someone has that sort of life expectancy, they probably need to keep their policy for their family, right? Unless there's some extenuating circumstances. So what we do is not that. Like, that is a extremely small portion of the marketplace. Does it happen? Yes, but it's not the bulk. The bulk of the marketplace is, here's a classic example. Gentleman is 90 years old. We literally just completed his sale. And he has a $150,000 universal life policy. So that's in the permanent bucket, right? There's no cash value in it because, and this is going to sound familiar to you, the cash has been chewed up by the increased cost of insurance, right? So there's no cash. He's paying $1,600 a quarter for the policy. And he's basically, here's the thing. His wife passed away a year ago, so really doesn't need the policy. He's irritated at paying $1,600 a quarter. Why am I keeping this? He asked his sons if they wanted to pay it, and they said, "No, Dad, we don't want to pay it." So if he didn't know about life settlements, he would have surrendered that policy and walked away with literally zero. But we marketed his policy, and the opening offer for his policy was $15,000. And by the time we were done, it was $43,000. So last time I checked, that beat zero. And that's what we do.
Yeah, that's a great example of a spouse surviving, and they feel like, we had this for my spouse, they're no longer here. So do I need it? Especially when we start talking about budgets. We know, you and I know, the cost of gas has gone up. The cost of food has gone up. I mean, I used to call it a $50 bag. Now it's a $100 bag. It's probably like a $150 bag every time I go to the grocery store. And I'm just picking up a few things. Mm-hmm. And, we have the ability, the potential to earn more income when we're still in our working years. There's things that we can do. But when we are in that retirement, we've already done all our working years, and maybe we are not able physically, or maybe we're caring for a loved one. We don't have that ability to go out there and get a second job or start a podcast or anything like that. So now what do we do is we start looking for resources, because we have to keep food on the table. We have to keep those major expenses. And I think that oftentimes people have not planned for it. And they didn't realize the cost of gas would increase so drastically, at the cost of food. And so giving somebody $43,000, I mean, what was that? A party? Was it, I mean, what did that look like?
Yeah, so he was thrilled, because a lot of it for the clients is getting out from underneath, in his case, $1,600 a quarter of premium payments. That's extra cash flow, right? We recently sold a policy, and this one just blows my mind. It was a $350,000 policy, and the premiums were $50,000 a year. And we actually sold it. Now, grant you, we didn't sell it for much because of the premiums were so high. But once again, the client literally was lapsing the policy. It was going to go away. So in that particular case, $5,000 is what she got. She was so happy to at least get something and get out from underneath, $4,000 a month of premium payments. And obviously that's a very extreme example, but it happens.
Yeah. And by the way, we're using a lot of nomenclature here. We're using a lot of technical terms. I want to make sure that we're helping everyone. So a premium means the monthly obligation for your life insurance policy to keep it in place, to keep it in force, to keep it active. So if those premiums are becoming, and some of them do increase, like a term policy might stay level, but at some point it might increase. But if you have a cash value policy, there are a lot of situations where now that premium is also increasing and it may not be keeping in line with your ability to pay. So those are two amazing examples. So the bottom line is somebody, if they have a life insurance policy, they just think, I don't even know about this. Do I need it? Should I keep it? It's worth a conversation.
Yeah, I absolutely agree. And interestingly enough, we talked about people that have cash value in their policies, right? But what about people who don't? What about people who have term policies? We sell term policies almost as often as we sell policies that have cash value in them. And that's kind of backwards thinking, like, how does that happen? Well, and I know you're going to qualify this, Leah. So typically term policies have to still be convertible to a permanent policy. And many times they are. So if clients are reaching the end of their term and they're not going to do anything with it, selling it makes sense because they're going to have zero, right? Or maybe they're coming to the end of their conversion privilege, and I know you're gonna debrief everybody on what that is. But they're coming to the end of their conversion privilege, and maybe they only want to convert part of it. Don't let the rest of it go to waste. Look at selling it, because once again, it's worth zero. So let's get something for it.
Yeah. So let's kind of unpack that a little bit.
Right,
Let's
exactly.
go back
I'll let you do that.
I don't want this to be a master class, but just understand
Exactly.
that there are options.
Yes.
If you have a term policy that has a birth date and an expiration date, and you are considering you're at the end of your term, the premiums on those go up exponentially. I just did a quote for a client. He was paying $100, like a quarter, maybe $400 a year for $1 million policy. Now he's, 72. Premiums are not going to be $100. They're not even, that won't even buy you a $50,000 policy. So you're talking about $2,500 a month for $1 million policy if you can qualify.
Mm-hmm.
So that may not be doable. If your policy is a term policy and it is convertible, and by the way, not all term policies are, but if it is convertible, you may be eligible to go ahead and look at this option to sell your life insurance policy if you no longer need it or no longer want it. And at the same time, you don't have to sell the entire portion. Let's say, for example, it is $1 million policy, kids are gone. $1 million made sense when they were younger, but now you're older and you're thinking, you know what, we just need maybe $100,000 or $200,000 in coverage or $500,000. Maybe you sell a portion of it. So is that something that's possible? I'm assuming it's possible.
Absolutely. As long as the policy is still convertible, yes. The other thing that we can do, and once again, like you said, don't want to get too wonky, but the other thing that we can do is sometimes if we have a high enough offer in a policy, and it's a non-term, right, non-convertible term, let's just say it's a permanent policy. If we have a high enough offer, sometimes we can even retain a death benefit for clients' beneficiaries. So they wouldn't have any more premium payments. Maybe they get a little bit of cash and retain a death benefit for their beneficiaries. So there's a lot of flexibility here. Obviously, it can't happen in every single case. And for many people, they don't want that or they don't need that. They just want to get rid of the policy. But there's some flexibility in the market to take care of clients.
Yeah, and this is such a good point. This is strategy, folks. That's why I don't call myself an insurance agent. I am so much more than an insurance agent. We are going to strategize and bring in the specialist to help you achieve whatever your retirement dream looks like. And being able to have these incredible resources is really one of the values that I can bring to the table. It's much more than just it's not a one size fits all and you just kind of say, well, you've got this policy, let's go ahead and sell it. No, does it make sense? How young are you? What do you still have debt? What do you intend to leave to your children or grandchildren and all those things? So it really requires us to kind of put those pieces together and to see what is going to be the outcome that you are desiring that is the best for you. So not to toot my own horn, but it really is, it does require somebody who's going to be more of a strategist. This takes time. It isn't something just put the numbers in, numbers out. we have to work together. And that's a great thing about Lisa and I knowing each other, is because we have worked together. I've called her on situations and maybe they didn't work out, but I have that resource that you don't have to try to fumble and go through and try to find somebody who is a person of integrity, who knows what they're doing and is really going to work along together and not be fighting. We're not fighting against each other. We're always working to bring the best outcomes for our clients.
Yeah, and Leah, thank you for that. And you raised a very good point. I'm not saying that every policy we market sells, right? But I am saying there's a positive outcome no matter what happens, because if it sells, that's great. Clients are happy, right? They have money. If it doesn't sell, there's still a positive outcome, because at least you and your client know that you have looked at all the options,
Yeah.
and that if the client does decide to lapse or surrender their policy, they know that they're not leaving any money behind. So there's a lot of positive to what we do, whether or not we sell a policy. Clearly, our job is to sell a client's policy, but sometimes the numbers just don't work for the buyers and we don't get offers on policies. And you know what? There's still positive there.
Yeah, for sure. So let's kind of rewind a little bit. We talked about couples. What are some of the situations that couples face where they're in situations now that they are looking for potentially selling their life insurance policy, or at least a portion of it?
That's a great question. So I know that people go, gosh, why would anyone want to sell their life insurance policy, right? Clearly,
Yeah.
there's 2.5 million reasons, but here's typically what we see. The house is paid off. The kids are gone. As you said, the policy did its job for 20 years, 30 years, 5 years, but the situation has changed. What I bought the policy for however long ago is just not an issue. I've had this happen where a policy is 5 years old and clients have received an inheritance and they really don't need the policy anymore. So why keep putting money into it? So it's my spouse has passed away, perhaps life events. I'm getting a divorce. Like I said, kids are gone, house is paid off. I have a business and I've retired from it, or I've retired in general, and the premiums just don't fit in my retirement budget. Or now that I've retired and my spouse has retired, we have that income from pension plans or 401ks or whatever it happens to be. And I don't need the income replacement that this life insurance policy was designed to do, right? While I was working, in case something happened to me, my spouse would at least be able to pay off the house. That's no longer an issue now that I'm retired. So like you said, it's term policies that are coming to the end and they're not going to do anything with them, or they're only going to convert a part of the term policy. Like I said, don't let the rest of it go to waste. Or lastly, you had alluded to it, I am looking to find money to pay for assisted living or memory care or home care or aging in place for either myself or my spouse. Selling a life insurance policy can be another tool in the toolbox to be able to do that.
Wow, so much good stuff to unpack there. Something I want to ask you, because this just came to my mind as you were speaking. We're really a lot of times talking about individual families, but what about when it comes to more advanced planning? How about executive bonus plans, buy-sell agreements, key man policies? Are those eligible for this type of situation?
Absolutely. We have sold policies where the corporation's the owner. That does not matter. Whoever is the owner of the policy or whatever entity is the owner of the policy, including getting wonky here, people. I'm sorry. ILITs, there's a life insurance trust. Whatever entity owns the policy is the one that gets the money. So yeah, buy sell agreements we said, because what happens if the partnership breaks up, or like I said, the business is sold, or one of the partners has retired, then that buy sell policy is no longer needed. Absolutely, all those can and do work.
Wow, that is so good, because you touched on it. Is what if that buy sell, that partnership breaks up and now you have these policies here? Instead of just surrendering them, maybe it's an option. Maybe there's an opportunity to sell that policy and recapture some of what you've put into that, if you're still in that surrender, if you're still in that surrender period specifically. So that's the first thing that comes to mind, is partnerships, because by the way, most partnerships don't last. And I'm going to have a whole conversation about partnerships. That's a one area I agree with on Dave Ramsey. There's not many, but that is the one that I agree with him, is that if you're thinking about doing a partnership, think again. It doesn't work. It just doesn't work.
It's a marriage, that's for sure. And I'll give you a quick example. We had a gentleman that had a $1.25 million term policy, and he owned car dealerships, and he sold the car dealerships. Doesn't need it anymore, right? He actually kept 250 for himself, and we sold the million. So that's a good example of when, key person policies that aren't needed anymore can work for life settlement.
Wow. See, I love doing these because I learned so much. I really do this so that I can learn. And you just taught me something right there. That was truly a blind spot for me. Wasn't even thinking about that. So I love that, Lisa. That's incredible. So now let's talk about a little bit. We touched on businesses, we touched on couples. What about somebody who finds themselves suddenly single?
Mm-hmm.
They've lost their spouse. Because, by the way, most of us are not going to pass away together unless you're in probably a car accident, right? Usually one spouse is going to survive. And I saw the statistic, which it said 60 to 70% of widows are women. So a lot of this conversation is going to be probably for our women in the audience. They find themselves suddenly single. Maybe they have gone through a divorce, or maybe perhaps their spouse did pass away. And what are situations with somebody like that maybe looking to sell their life insurance policy?
Yeah, absolutely. And we see it on a fairly regular basis because it goes back to the policy is no longer needed, right? My husband and I have life insurance on each other. And if something happens to him, am I going to need the policy that I have, right? I'm the insured with him as the beneficiary. No, and I don't have any other beneficiaries that need it. So we see that on a regular basis. Divorces make sense, right? Do I really need to have the policy where my ex-spouse is the beneficiary? So we see it, like I said, on a fairly regular basis, and this can be a way, once again, instead of just releasing the policy and letting it go, at least getting some money for it, because you know this, Leah, life changes, right? Just because we have a roadmap doesn't mean that that's where life is going to take us. It's life gives us curveballs sometimes. So when that happens, it's at least good to know that there are options for this policy instead of just kind of letting it go for little or nothing.
Yeah, for sure. One of my colleagues, good friends, Camille Jones, always says, life is going to be life in us. Life is going to life us. And what I think of a lot of times, and what I hear often, is that surviving spouse. I used to get calls like this a couple times a year, but now it's almost monthly and even weekly from that exact situation. Wife outlives her husband, and now she's looking at their finances, and it was not really the rose colored glasses that she thought it was. And she's realizing that they didn't really have their finances set up. There wasn't as much money in their 401k. They don't really have a personal pension. And now they're looking at, what do I do for long-term care? How am I going to care for myself? Mm-hmm. Do I do the spend down? We didn't have a long-term care policy. We didn't get the life insurance with a long-term care rider, which, by the way, are incredible. And we don't really, feel like we have any other options. Maybe an annuity with a long-term care rider is also another element. But when they're looking for options on how to fund this, potentially I would think that somebody who finds themselves suddenly single would be a good opportunity for them.
It can be, for sure. And what people don't realize is their life insurance policy, any life insurance policy, is an asset that you own. It's an asset like your car, and it's an asset like your house. It's an asset like your stocks and bonds. It is an asset that you own. And just like those assets, you can sell it. And the process is called a life insurance settlement or life settlement. And people just don't, and I get it, right? It's a little weird. No one thinks about their life insurance policy as being an asset that they own, but it sure is.
Yeah, unless they talk to me and then they know it is an asset that they own. But you're right. A lot of people think of it as an expense, but really it's not, even if it's a term policy. And let me give you an example. Many people, baby boomers, they bought term, they didn't invest the difference, and now they're finding themselves towards their sunset, and they still have some debt. They still would like to have some life insurance. If their policy is convertible, that can be a huge asset because maybe their health has diminished a little bit. Maybe they've had some chronic situations or even some diagnosis. If that life insurance policy is convertible, they can keep coverage without proof of insurability. So that is a huge asset. So I love that you said that. That's so critical. It truly is an asset. Well, we're kind of winding down here, Miss Lisa. So is there anything maybe that we haven't touched on that you really feel that people need to know about selling or potentially selling their life insurance?
Yeah, a couple things real quickly. First of all, this is legal since 1911, so that's really important. And number two, highly regulated by departments of insurance across the country. So I'm a life settlements broker. There are buyers direct advertising on TV. And for me, is my fiduciary duties to clients to market their policy to many different buyers and get the most amount of money for it that we possibly can. So legal, highly regulated life settlements broker with a fiduciary duty. And that's really important.
That is so good. Now, I love that you said it's been legal since 1913. This is nothing new. We just don't know about it. It's not really something that probably you're going to see a lot of advertisements about it, right? Unless now you're aware of it and now computer starts bringing it up for you. But anyway, so yeah, that's really good. And that it is completely legal. You wouldn't do anything that isn't legal. So really quick, is this taxable? Are the proceeds taxable?
I'm going to preface this and caveat this by saying I am not a tax professional and I'm not a CPA, right? So I can't give tax advice. However, I'm going to answer your question. The premiums, those policy premiums that clients have been putting into policies from the beginning of the policy are a basis. It's what they've paid for this asset. So if the proceeds from the settlement is underneath that basis, what they've paid in premiums, there should be no tax. If it's over that, just to make life simple, it's typically long-term capital gains over that, typically.
That's good. So think of it about like real estate. You have a basis when it comes to you selling your home. You're going to have a basis when it comes to selling your life insurance, and you should work with a CPA that can really guide you on how to best address that. So I love that. Great information. Thank you so much, Lisa. I appreciate your time. This is so valuable. And if you have questions, what should they do? If somebody is thinking about this, it might fit into their financial plan, they are suddenly single, or maybe they're just thinking, gosh, we got these life insurance policies, they just don't fit into our budget. What's the first step?
I think they call you, Leah, because you are important to advise them if we are the right solution, because life settlements are not the right solution for everybody. They frankly shouldn't be the right solution for everybody. But you will be able to guide them into if this is the right solution for them, because then I know you're going to call me.
Good. That's perfect. Awesome. So I appreciate you. Thank you so much for your time. And really think about it this way. There's always a way. If you're struggling right now financially, my mentor taught me there's always a way. This is something that is definitely worth the conversation. No cost to you to get that quote, or is there a cost for the quote if they go through it and decide not to move forward? Okay, perfect. There's no fee for me to assist you to explore this, and Lisa doesn't have any fees on the front end. If you decide you can get the quote, if it works for you, wonderful. If it doesn't, hey, no harm, no foul. You've met a wonderful friend. So that's the bonus on the whole thing. So that's it for us. And as always, please like, comment, and share this. We'd love to hear from you. We'd love to hear your questions. And if there's a topic you would love us to cover here, or a guest, if you would like to be a guest on my show, I would love to chat with you. And with that being said, we will see you all at the top, because we all know it is way too crowded at the bottom. So bye, everyone.